everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfield. Here are several things to pay attention to for the upcoming trading week. Now, last week was supposed to be kind of quiet, right? Getting ready for that holiday break. Let's take some time off. Maybe that caused a lot of volatility because Monday and Tuesday were nice little updates for the markets, creeping towards those all-time highs. And all of a sudden, everything changed on Wednesday. Tremendous volatility, big down day, and that set the whole tone for volatility for the remainder of the week. Question is, do we get more of that in the upcoming week? Well, what I can tell you is Monday markets are going to be closed in observation of Christmas. Merry Christmas, everyone. We hope that you have a very happy holiday, whatever it is that you celebrate. And if you don't celebrate anything at all, that is fine as well. Just go, be good, spend some time with your family and friends, and enjoy your time on this great giant marble spinning through space at an alarming rate. You're rotating right now, and you don't even know it. But there are some funny parts about this that may present opportunity to you. Now, if you're like me, you love numbers and statistics because trading is really a probability game and trying to put those odds in your favor. There is one belief system out there that is an interesting one. Now, it has to deal directly with old St. Nick here, and don't trade like St. Nick on the holiday season, guys. Take a break, travel around. But here is the Santa Claus rally. Now, you might be wondering, what is it? Well, it may have you rejoicing as old St. Nick here on the floor of the exchange, cheering with his jubilant trading friends, because historically, it does bring in a nice move in the market. Now, you may be asking yourself, well, when does the Santa Claus rally start, Merlin? What does it all represent? Well, the Santa Claus rally is technically the last 5 days of the trading year plus the first 2 of January, which means that last Friday, December 22nd, is the official start of the Santa Claus rally. Then you have the 26th, the 27th, 28th, and the 29th. That leads us to this coming Friday. Then you'll have also January 2nd and 3rd will be the first 2 official trading days of the year. That is the Santa Claus rally. Now, what's the rate of return, you ask? Well, over the course of the last, going to the 1950s, so call it 73 years, it has averaged about a 1.3% gain. Now, okay, fine, 1.3 doesn't seem like that much. I mean, Wednesday we beat that just in one day alone, and it seems like regularly we were having 1 or 2% days. So why 1.3%? Here's why. There is an 80% chance, based off the data from the 1950s all the way through today, that an 80% chance that that Santa Claus rally will happen, meaning we're going to have up markets, and it averages about a 1.3% gain. Now, while it isn't a lot, it's not a substantial gain, there's a high probability of it happening. Now, if you take that and decide to put some trades on, again, be careful. You should have stop losses in place just in case it doesn't, because there's another mantra out there that's almost as powerful as the Santa Claus rally, and that is the markets can remain irrational longer than you can remain solvent. So everything works until it doesn't, so be careful out there if you're trading that Santa Claus rally. Just know, it started on Friday. We've got another few days to go, and then we get into January, and we'll see what those results are. We'll probably talk about that result here on Monday Morning Must Knows. All right, let's move on to economic data. We have quite a bit of it, and I want to make sure we get to the economic data. Here you have housing. There's 3 pieces this week, 2 that are going to be on this slide. The first one is the S&P Case-Shiller Composite 20 Home Price Index. That's Tuesday at 9 a.m. Eastern Time. And at the exact same time, you have HPI data month over month coming out at the same time, Tuesday at 9 a.m. Now, typically during these holiday weeks, the regularly scheduled announcements, economic announcements, get kind of bounced around because, some agencies are closed. So what we're getting this week is what we're calling the Thursday data dump. Now, that Thursday data dump brings us a lot of information, so be very careful if you're trading that day. Right from the opening bell here, you have 3 announcements: the unemployment claims, goods trade balance, and preliminary wholesale inventories. And I said right from the opening bell. This is actually 1 hour before the markets open, so it's even before the opening bell. Now, after that opening bell, you have pending home sales at 10 a.m., then you have natural gas storage at 10:30, and finally crude oil inventories at 11 a.m. Eastern Time. So a lot of economic announcement coming out on that Thursday data dump. You've got a relatively quiet week. Typically on this Christmas holiday week, volume is very low. A lot of traders, a lot of institutions taking time off for the holidays, as you should do as well. And what that does, it creates lower liquidity environments. Because of that, we may have extreme volatility, even with very low volume. If there's not a lot of buyers and sellers out there, the same size order can move markets dramatically. So be very careful out there for this holiday week. Whatever you do, decide to do, on behalf of myself and Online Trading Academy, wish you a very happy holiday season, and we look forward to seeing you for our next week's Monday Morning Must Knows, where we talk about the end of the year, those final couple of days. We will see you next week.